Good morning, everyone, and happy Wednesday or hump day, as some people like to call it. Um, my name is Tony Butler. I'm here with Insurance Agency Marketing Services, and I'm one of the life sales directors here. And today's webinar, we're going to be discussing Mutual Trust Life, and I have Kip Walker and Ryan Dahl with Mutual Trust Life on the line with me, and we're going to be talking about what Mutual Trust offers. One of the big reasons why we're doing a webinar today, or I decided to schedule one today, is because I don't know if a lot of you have heard about Ohio National, which was a mutual company, and now they're changing over to a stock company. So we've been inundated with a lot of calls in regards to what other companies do you guys have that are mutual companies, and Mutual Trust is one of our top carriers. So we thought this would be a great time to have a webinar. So with that, I want to talk a couple of things about what we offer here at Insurance Agency Marketing Services. So for those of you that have attended our webinars before, you're familiar with this. For those of you, this is the first time. Want to make sure that you have information on the different things that we can provide for you to help you grow your business. So with that, let's get started. Um, First and foremost, we have a new producers builder. This is to help those agents that come on board. This is kind of an incentive, or is an incentive, that we have available for you based on the production that you produce. Uh, we can offer additional perks, if you will, whether it's a 1,500 piece mailer, 3,000 piece mailer. We do offer retirement boss radio for you. There's marketing dollars that is available. We even have a Ritz-Carlton package. All of this is available for you based on the production that you provide. As you see here, we've got 5 different levels on this. This is paid production. So if you have any questions on new producers builders, or any of the things that we do offer with our new producers builders, please do not hesitate to give us a call. Any of our sales directors can provide you with additional information on that. Next, we have our IAMS Business Builder. And one of the big things that a lot of our agents like, or a lot of our advisors like, is the ability to be able to refer additional advisors and be paid a referral bonus for that. We offer a $50 one-time referral bonus on any advisor that you refer to us, and they get appointed with any of the carriers that we work with. And then any business that they submit after that, we do provide spiff for you as well, depending on the business. As you see here, we've got life target premium indexed annuities, single premium life, and MIGAs as well. So if you have any questions regarding our IAMS Business Builders, please feel free to give us a call. Be more than happy to provide you with additional details on that. We also offer back office support for you. We want you to work smarter, not harder. So we're here for you from submissions to commissions. So what that means is we provide you with business tools and resources to help you with your business. A huge thing that we offer is paperless contracting. We offer top sales expertise and coaching for you. We're available to do life and annuity quotes for you as well. A lot of forms that you need to work with your business. That's available at your fingertips. We'll talk about that here shortly. And that's via our IAMS website. Now, it is a 24/7 website. As you see here, our website is www.iamsinc.com. The website provides a plethora of different tools for you, whether it's sales tools. If you're a life agent, you can do term quotes as well as universal life quotes on our website. You can obtain forms on our website. We do have annuity grid, so we have annuity information for you, as well as single premium life information for you. If you need assistance as far as navigating through our website or getting registered on our website, be more than happy to help you with that. Just feel free to give us a call, and we can definitely walk you through that process. Now, with current pandemic, one of the conversations that we have every day is I'm not able to get in front of my clients. So we've been doing a lot of electronic applications, and I strongly encourage you, if you're not doing electronic applications, to get comfortable with doing that. we can walk you through that process as well. We have a couple of platforms that we utilize for electronic applications, one of which is Firelight. Now, Firelight, you must get registered for Firelight through our website. And on that platform, as you see here on the left, these are the carriers that's available to you. The majority of the carriers that we work with on Firelight are annuity carriers, but we do have some life carriers that's available on Firelight. Equitrust is one of the big ones that we have. The other platform that you can utilize for electronic applications, if you're a life producer, that's going to be via our website, via IGO EAP Solutions. The majority of our carriers are available on the IGO EAP Solutions platform. If you need assistance as far as how to navigate through that, again, be more than happy to walk you through that. Next, I'd like to talk about our creative marketing solutions. Our creative marketing solutions is there for you, and I think we do this better than any other agency out there. We can help you whether it be turnkey, agency, or digital solutions. What that means is if you need assistance as far as professionally written handouts, newsletters, postcards, you're looking for a logo design or you want to redesign your logo, you're looking for brochures, personal website assistance, digital marketing strategies, or you're looking to build a website, we can assist with that. We have a very good creative team that the sales directors work with to help you grow your business. I would say if you haven't done a marketing analysis, and what a marketing analysis is, you would get together with your sales director and we would do a deep dive into your business, basically how you're doing your business, what you're looking to do presently and in the future. And we can provide some solutions for you, some sales ideas and concepts to help you grow your business. If you haven't done a marketing analysis, I strongly encourage that you do. Definitely reach out to us. We'd be more than happy to schedule one with you. Take about 30 minutes. Within a week or so, we can have those results back and go over that with you. Next, the retirement analyzer. We do have that available for advisors. It is free for qualifying agents. What the retirement analyzer does is it helps you with your clients uncover needs, whether they're asking, can I continue my present standard of living into my retirement years? Or how would it affect my family if I were to die prematurely? Or how would it affect my family if I enter a nursing facility? We can talk you through that, provide you with more details on the retirement analyzer. And if that is something that you would like to add to your business, I'd say definitely we can get you set up with that. So again, if you have questions, feel free to either reach out to me or reach out to your sales director. We also have an IAMS wealth management team. That wealth management team is there for our advisors, those that have higher net worth clients. Charles Hiring and his team do a great job in assisting our advisors in increasing their revenue, helping improve client retention and strengthen that relationship with those clients. So if this does interest you, please reach out to the wealth management team. Ask for Charles or anyone on his team. They'd be more than happy to help you with that. Lastly, before we get started, we finally have a trip on the books. It is our Top Producers Summit. That summit is scheduled for 8/28/2022. As you see, the qualification periods here at the bottom, it's from December 1st of 2020, 4.5 million points to qualify. If you have questions in regards to our Top Producer Summit or you need more information, feel free to give us a call on that. As you see, we've got some very nice exotic locations that will be going on. I do have a polling question here for that. So if you are interested in it, you want information in regards to where you're at from a point standpoint, we can provide you with that information as well. So let me put that up there real quick. Let me launch that. give you guys a few minutes to reply to that, and then we'll get started on the webinar. All right, I'm going to leave this up for a few more seconds. Looks like we've got quite a few people responding. Okay, I will go ahead and close that out. And for those of you that were interested in more information, we'll definitely get that out to you. So with that, Kip, you there?
Yes, sir, I am here, Tony.
Okay, I'm going to change you to be the presenter. There you go.
All right, sweet. All right, well, thanks, Tony, for having me. It's always great to be with IAMS and Tony, you in particular. So we're going to talk about infinite banking, and it's a very powerful concept. There's been a lot of excitement generated around this concept, especially lately, which we've noticed. So I really appreciate everybody who's taken the time to join us. I'm not going to make anyone an expert on anything, or nobody can do that in 20 minutes. But what I am going to do is give you the overall idea of the concept, and you'll have a good idea of how it works, hopefully when we are done here. But what I'd like you to do is take notes, please, and ask questions. There'll be time for questions at the end. And also write down some names. Think about clients who are on your calendar and your book of business, meetings you have coming up, because that will be a great way for us to really make this meeting valuable and make your time here valuable and our basis for moving forward afterward if you decide to work with mutual trust in the infinite banking space. Here's our agenda. I'm going to cover the first part, and then my good friend Ryan Dahl, Sales Development Team Specialist, will cover the second part regarding mutual trust support of IBC. Say hi, Ryan.
Hey guys, thanks for having me. I'm sorry I was a little late this morning. I was having some technical issues, but I'm here now and happy to be with you guys.
All right, no worries. And so we'll hear from Ryan a little later. I want to give you a little bit of information about mutual trust for those of you who are not familiar with us. We have been around for over 110 years. We are really focused on whole life insurance in general. And in particular, we've been throughout history very strong in the high early guaranteed cash value space. And that lends itself to this type of concept. And so we have come to grow around the infinite banking concept more thoroughly. If you take a look at our top producers, they tend to be either infinite banking practitioners or they are college planners, just because of the nature of our business. And so as you learn more about us, you'll find out why that's the case. We have been around since 1904, and we are built on the principles of mutuality. We are a participating mutual company, and we have an excellent history of paying dividends over that period of time, for over 110 years straight, actually. So a very good history there. Now, fast forward to 2015, and we merged with another participating carrier by the name of Pan American Life. And so as of that time, we are now a solidly mid-sized carrier. We were sort of a small, scrappy insurgent carrier, but now we're solidly mid-sized. We have over $6 billion in assets, $1 billion in capital and surplus. We are A-rated by AM Best and Fitch, and we don't pay for the other rating agencies because it's a waste of our dividends. So with that, we have also made some adjustments regarding the environment being in COVID. Now, we have been a little slow, admittedly, to the race or to the telemed space, but we have done so very cautiously and pretty successfully. And it really was COVID and the lockdowns that necessitated that. So with that, we developed telemed underwriting, which allows our advisors to underwrite applicants between the ages of 18 and 50. And the net amount at risk is $1 million or less, and they need to be standard or better. So my friend Ryan is going to talk to you a little bit more about that later on, and some of the other things we have coming up, including EAP. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it. That's my friend Robert Kiyosaki. He's not my friend, but he is a real estate guru, and we really like that quote because it encapsulates what we are doing. We are trying to help our clients build generational wealth. We're not trying, we're doing it. We're helping our clients build generational wealth. And I just have one issue with that very first part of that sentence. It's not how much money you make. Well, it kind of does have a little bit to do with how much money you make. But anyway, it gets the idea across. Infinite banking really lends itself to helping us help our clients and bring a concept that is not new, but is not well known to the masses. So with infinite banking, like I said, it's not new. It's been used by J.C. Penney during the Depression to meet payroll. It was used by Walt Disney to start Disneyland. He was tapped out on his creditors. Nobody wanted to lend him money. He had a cash value, a whole life insurance policy, and he used the cash value from that to start Disney World or Disneyland. We have Doris Christopher, who used her life insurance cash value to start Pampered Chef. And so this is not new, but it is not as well known as you might think. It used to be kind of more well known, but I think it kind of was forgotten at some point in the past. You remember It's a Wonderful Life, and Jimmy Stewart goes in to see Mr. Gower and to beg for money from Mr. Gower, and all Jimmy Stewart has is a measly $10,000 life insurance policy. So that's pretty much that was like the period when people actually use that a little bit more, but we're kind of bringing this out to a broader and more powerful way of using it, and really getting into the secrets of why it is so powerful. And so this little sentence here says a lot. There's a lot behind it. A financial principle based on U.S. tax laws and insurance contractual guarantees. There's a lot there. U.S. tax laws, so cash value growth that is tax deferred and can be accessed tax free. That's the tax laws part. Insurance contractual guarantees. These are powerful guarantees between the client and the carrier. And those guarantees say that you are going to pay a guaranteed premium that will not change, and we are going to, and then you will see guaranteed cash value growth within your policy and a guaranteed death benefit. It's all based on those guarantees. It's very powerful. Now, there are non-guaranteed dividends to add to all that, but those are the keys, those guarantees, because as you'll see, it's very important that we know what's happening going forward. That's a very important part of this concept. So access to capital is key to financial prosperity for businesses and for individuals. And it's very important when things come up that we have access to funds. And many times if you have an emergency and you need access to capital and you go to a bank, are they really keen on lending you money in your time of need? Usually they want to give you money when you already have it, right? So that's part of this concept, is having access to capital. So where are they keeping their capital if they're saving it? Is it in a liquid account? Can they get to it when they need it? Is it guaranteed? Is it guaranteed to be there when they need it? Is it taxable? Are they earning a little bit of interest and then being taxed at the end of the year on top of that, which is really a really strong headwind when it comes to accumulating wealth? Is it leveraged? Meaning, does it provide any other services or any other benefits besides just sitting there and earning interest? Will it still grow if they use it? And that last point really goes to the strategy of how you use your money, whether it's inside or outside of this concept, and we'll talk about that. So where are they keeping these funds? Certificates of deposits, savings accounts, money market accounts, cash. Really, those first two are what we're talking about, and those are guaranteed. They are safe. You know where the money is. You know that you can get to it. Maybe with the exception of the certificates of deposit, it might be a little difficult getting that money when you need it without taking some penalty. They are earning interest. It's guaranteed, but it is being taxed, and there are some limitations on it. There's really no additional benefits from it. And there's a certain relationship with the bank that you don't have with a life insurance carrier. meaning that, and this will be more clear as we go through, but you still have the traditional lending relationship even when you have your money in their bank. And so I'll kind of flesh that out here in a minute. We think a better option for this capital, and not to say that those other products and accounts are not important, they're all critical. All of this stuff is critical. But really, for this particular strategy, participating whole life insurance is really the key. It provides the guaranteed certainty that they need. That money in their policy grows guaranteed, no escape hatches. It cannot go anywhere but up. Liquidity use and control of your money, and these are terms that we really abide by and promote heavily, because what good is the money if you can't get to it? And so we always like to say that whole life insurance is not just about death, but also about life. And those living benefits are very important, and liquidity use and control of the funds in that policy are a big part of that. Now, you can take money out tax-free with no penalties, and it grows tax deferred as well. So really a benefit there. And then of course you have the death benefit on top of that for your children and grandchildren. So we have additional benefits. So we have a solution, and I'll dive more into what the solution is in a minute, but if we don't have a problem, then our solution has nowhere to go. So what are the problems we're dealing with? Well, business owners need access to capital, right? That's a big thing. Any business owner knows that. And individuals need access to capital, and anyone knows that, including me. Debt, how to own it and grow your wealth. So that just means that's how do we have develop a more efficient way of working with our debt and handling our debt and having it not impede our growth towards wealth. How do we deal with the limits of qualified plans? Qualified plans are great, especially when you get that match, but how do you really win in a qualified plan? You win if you take the money out at a lower rate of tax than when you put the money in, right? The government delays or defers the tax calculation. They defer it, but you ultimately do pay those taxes, and they're going to tell you how much you're going to pay when you take it out. So we are stacking trillions upon trillions of dollars in debt on top of debt, and when it comes time to retire and you're accessing the funds in those retirement accounts, our tax is really going to be lower. Maybe, maybe not. Let's take some of the guesswork out of that and take that out of the equation altogether. Coping with life's emergencies. Like I said before, when you need money most, banks aren't so keen on lending it to you. And so it's really important to be able to get to funds when you need them. Keeping more of what you make. How do your clients keep more of what they make? And that really goes to, again, reducing the tax burden, and also, as we'll see, reducing the interest burden, two of the biggest headwinds to building wealth. So what do you think is the biggest financial problem facing the average American family today? It is, how do they save for retirement and help their children go to college? Two big areas of concern for families. And the first one, how do they save for retirement? That's kind of always off into the future more so. But when you have families who have college-age kids, which mine are coming up, I have a 15-year-old and a 17-year-old coming up in college. The second part, college planning, really hits you in the face, and infinite banking really helps with all of that. As some of you may know, when funds are relocated into a whole life insurance policy, they become invisible to the financial aid forms, and that can help the student get a better offer from the school, get a better reward from government programs and things like that. So that's just another aspect of this, that it really helps reduce the burden of trying to help your kids get a good education. Now, as I mentioned, interest is a huge headwind. 34% roughly of every dollar that we spend is going to interest. Think about that. You have, a quarter to a third going to taxes, at the very least, I would say, if you count all the taxes: income tax, real estate tax, gas tax, sales tax. I think 25 to 30% is generous. But then you have another 35% going to interest. We like to smell of a new car every 3 years. It's going to be even higher for you. Housing, a lot of heavy interest burden there. General just living expenses, having fun. And so that doesn't leave a lot left over for savings. Our clients are being told to, maybe cut back here and there on how they're living, cut down their living expenses, get on a budget, and they don't want to hear that. We want to tell them a different story. Many times we can find areas in their financial plan where they are spending too much on insurance, too much on housing. Maybe they're overpaying on their mortgage, thinking that driving down that mortgage quicker is a benefit to them. The house price is going to go up. The price of their house is going to go up or down, regardless of how quickly they pay it off. And once you put the money in, are you going to be able to get it back out? So there are other things we can do. Are they overfunding the 401k above the match? Maybe there's some funds there we can free up. So it's not about trying to make them, stop getting coffee every day or, not go to Starbucks every day. We can find premium dollars for them, and we can redirect those dollars so that they don't have to worry about scrimping and saving. They can live their life, and we can still help them to reduce the interest and tax burden that is really impeding their financial plan. It's not just about the interest rate, but also the volume. You just look at the volume of interest on things like car loans and credit card debt, mortgages. You're looking at around $15,000 a year in interest, and that's really just the average. It can go much higher. But just think about how we could help our clients if we could just recoup a little bit of that. Instead of having the typical conversation with an advisor, Mr. and Mrs. Client, I can get you 1% more or 2% more. I can introduce a little bit more risk into your financial plan. How much risk can I introduce into your financial plan before you hate me? That's kind of the discussion we're having a lot of. And we're talking about a different aspect. Not that that other stuff isn't important, it is, it's critical. But we're talking about another aspect, and that is to prevent the loss of funds instead of gaining more higher rates of return. And so there's a lot to be gained by just preventing that loss of funds. And once money is spent, it's gone away forever and can never be recouped. So that's really where we're coming at from the other angle here with the infinite banking concept. Financing. So this is the part where I mentioned earlier about while you're using it, does it still grow? And this is more of a strategy of the infinite banking concept that's really key when it comes to how you're actually using your money. So the key here is that whether you drain money out of a savings account or take a loan from a lender, if you assume the same interest rates, so I have a savings account, I'm earning 5%, I have $10,000 in there, or I have a loan, I'm going to take a loan, and the loan rate is 5%. If you pay either of those back, so you either drain the savings account of $10,000 and then put the money back over 5 years, let's say, or you take a 5-year loan at 5% and you pay the money back to a lender, the cost is exactly the same. It's exactly the same because of the opportunity cost. The opportunity cost from the savings account, from draining the savings account, is 5%. The loan is 5%. When you factor those things in together, including the opportunity cost, the dollar amount is exactly the same. So if that's true, which is a better strategy? Well, neither one of these are optimal. Really, the better way to go is to collateralize. Collateralize an asset that is a continuously growing asset that is guaranteed to grow. And then when you pay the money back, it's as if you never took the loan when you take a look at the savings account. So Albert Einstein once said, compounding is the 8th wonder of the world. So he was a pretty smart guy. So if that's true, how often do we want to interrupt compounding? Never. And so what collateralizing does is it gives you the ability to negotiate for the best rates because you have the asset. If you're just taking a loan and you have no true liquid assets, you're not going to be negotiating for the best rates. You're in a position of weakness. If you have a cash liquid asset that you can use as collateral, you can negotiate the best rates. Now, there's different ways to use that collateral, but we think the best way is to use it within the structure of a whole life insurance policy because the money is in the policy, and because of that, the carrier has the funds in-house in their general account, And you can take a loan against the cash value in your policy. So when you take a loan, you are not taking money out of your policy. You are taking a loan from the general funds of the carrier, just as you would with a bank. And what we do, though, is we place a lien on the cash value of your policy. And then you can take the loan. The money in your policy continues to grow. Now, in our case, it's 4% guaranteed every year. That's a gross rate. But the money, the policy premium goes in. You subtract out expenses and costs of insurance. The rest of the money goes in the policy and continues to earn 4% every year. That's how it works. So that continues to happen whether you have a loan out or not. And plus you have non-guaranteed dividends on top of that. So that ability, that structure of having the funds there in-house and having those loans available really is a very efficient way to use your funds. Now, if the carrier's loan rate is not competitive, ours currently is 5%. So you're earning guaranteed 4, we're going to loan to you 5. Maybe that's not the best rate, and maybe you don't care if the loan shows up on a credit report, and you don't care that the bank can call your loan anytime they want, and you don't care that that's going to limit maybe your access to capital from other sources because you have more loans outstanding on a credit report. Because as you know, whole life insurance, none of that shows up on a credit report. That's between you and the life insurance carrier. So it has no impact on your credit availability at that time. So, but if you don't care about any of those things and you just want to get the best rate, you can collateralize your policy with the bank. They love whole life policies. So it really puts you in a powerful position to negotiate those best rates. On top of that, again, just to reiterate, you have those guarantees, you have the flexibility, which we are very good at. As an example, we have clients who send in loan requests with their policy applications. Once the policy is enforced, the loan goes out. And we're talking, 10 days. The bank has to clear the checks to get the funds into the policy. Once the funds are in the policy, the loans go out. Loan requests are processed in about 3 days, 3 to 5 days at the outside. So it happens very quickly. It's a simple one-page form. You don't have to qualify, like I said, for based on your income, none of that stuff. If the cash is there, you get the loan. You can collateralize up to 95% of the cash value in the policy. The other 5% is the loan that we have to collateralize up front to make sure that that everything's covered. But if you pay that loan off early, the interest is going to be refunded to you. So it really is a powerful, efficient way to, again, use your money, have it continue to grow tax deferred. You have access to it when you need it, no matter what condition you're in or what your financial situation is. On top of that, it has additional benefits. So you have an immediate income tax-free death benefit to your children or grandchildren in the event that something unfortunate happens to you. And I know that I have my family, I have 2 kids, and I want to make sure that they're taken care of. And I think that most Americans feel that way, American families. So it's a very important part of this as well. Just a couple more points. No additional fees, no red tape. Like I said, you fill out a one-page form, send it in, you get your loan. Quick access, like I said, 10 days of the check being mailed in. The bank does its thing, the funds get settled, and boom, the loan goes out. Who are our clientele? This concept works for everybody. I mean, if you have a household income of roughly 70,000 plus, it's fantastic. If you have debt, it's fantastic. But really, it works for any of those individuals with a household of 70,000, I would say plus. Maybe you go a little lower in some cases, depending on the age of the client. But small business owners really get this. They understand the importance of cash flow and access to capital. And really, it really resonates with them. We have doctors, dentists, other professionals who love to use it. Real estate investors really do appreciate this concept. Just to give you an older example, it's just my favorite. I don't know why I always stick with it, but we had a gentleman who was a dentist. He took over his father's dental practice, and it was a family business. He knew his clients, and it was during the financial downturn in 2008. And clients weren't coming in because they were losing their jobs and they were concerned, and so they weren't getting the dental procedures they needed. And so when the son took over the practice, he wanted to do a couple things. He wanted to update the dental office that his father had, that he had given him. I don't know if he gave it to him or sold it to him, but that he had inherited. And so he wanted to do that. So we set him up with an IBC policy, and he used that to help modernize his dental practice. He also realized that he could make loans to his patients. He has a company he could do that with, but he could offer them a little better rate, and he could charge them a little interest on top of what he was charging if he wanted to. But the key was he was getting more patients in the seats. And so that's just one example of the power of this concept. It's really only limited by your imagination. And that is, by the way, the developer of this particular strategy that we talk about so much is Nelson Nash. And I neglected to mention Nelson Nash. I always want to give him credit. We lost him a couple years ago. We worked with him for several years on developing and promoting the infinite banking concept. So I want to give a word to Nelson. But we also have clients who just want to avoid red tape. They just don't want to deal with getting a home equity loan or another line of credit or what have you. I've gone through these a couple times, and especially these days, I mean, you have to just keep providing additional information and more information, and it takes months. And so some people just want to avoid that mess. Also, clients seeking liquidity use control, as I mentioned before, they just want to have control of their money. They want to know it's going to be there, and they want to have control of it. And then clients looking for safe asset alternatives. Whole life insurance is a very safe asset alternative. As a matter of fact, a lot of tier 1 capital held in, or the banks hold, is held with whole life insurance. So if the banks are buying it, I think that says something. Now, the client does need to be insurable. This is life insurance after all, so they do need to be insurable. Many times, though, sometimes we've had clients who weren't insurable, but there were other surrogates we could use within the family or in the business that could act as that insurable interest. Then we have a desire to protect our family, which I think we can all say we have a desire to protect our family. Whole life features, again, just to reiterate, guaranteed premiums equals guaranteed cash values. In our case, we use a policy called Horizon Value. Horizon Value is our go-to for infinite banking cases. It has the highest early guaranteed cash value in the industry, bar none, no matter who you're looking at. The first 6 to 7 years, the guaranteed cash value is higher. And that really lends itself, again, to this concept in helping our clients get out of debt, helping them reduce their taxes. All of these things really are helped by that high early guaranteed cash value and our extremely liberal loan policies that we have. Paid up additions riders. Paid up additions riders are another important part of this. And you can think of paid up additions riders as a single premium paid up whole life policy, except they are extremely liquid and very cash rich. You put in $100, for example, of premium, you're going to see $94 immediately in the cash value, no surrender charges. It grows at 4%. By the end of the year, it's at $96. It's going to keep growing at 4% every single year, up and up and up. So very flexible. Roughly 60% of the premium on a typical IBC case is going into that paid up additions rider. So just keep that in mind as kind of some insight into how we build these things. Policy loan provisions, again, very liberal policy loan provisions. And again, our loan rate is 4%. I'm sorry, 5%. And so very, very competitive loan interest rate. We have additional features that you can add on, additional riders, a waiver of premium, very powerful rider that says if your client can't work, Mutual Trust will pay the premium. We have the same rider, or similar, I shouldn't say same, similar rider on our paid up additions rider, which says if the client can't work, we're going to pay their paid up additions rider. Now, just as a comparison, this isn't a waiver of cost. This is actual waiver of premium. So if you are unable to work, Mutual Trust will pay your premium as if the client is paying it themselves, meaning cash value continues to grow. Dividends continue to be earned as if the client was paying the premium themselves. So again, very powerful instead of just waiving the cost and freezing the policy in place. And of course, we have accelerated death benefit, very, very common. Chronic illness riders becoming more popular, and we have that. You're able to accelerate the death benefit income tax free up to $1 million over the course of a period of years. And there are some other limitations on that. And the key, though, is that both of those are issued on all policies. The chronic illness benefits available on all policies rated table 4 or better, and there's no additional premium on that. So a great alternative, but not a replacement to long-term care. Okay, so we have a dedicated concept coordinator for infinite banking. His name's Richard Weiser. He also happens to be our business planning guru. Very great resource for those of you who decide to sign up with us through IAMS and learn more about mutual trust and infinite banking concept and other things that we have to offer, which Ryan's going to touch on here in a minute. We have a software module you can use to run pretty complicated loan and repayment scenarios. We have a training program that you can use. We have videos that we're revamping right now on infinite banking. And we have some marketing materials on infinite banking as well, including other topics. So with that, I know I throw a lot at you. Hopefully you identified maybe a couple clients in your book of business who could profit from this solution. We would love to set up a call with you to go through more discussion. I'm sure Tony could be your point of contact for that and getting started on this. Just try it once. The solution IBC has a fairly high average premium. I think our typical premium is around $6,000 to $8,000. It doesn't take too many cases to move the needle. And we're going to be doing some extra things to help you get started with us and kind of doubling up on what IAMS is offering you if you sign up through Mutual Trust. And I'm going to have Ryan talk about that in a minute. But before we do that, Tony, are there any questions before we move on to Ryan's part?
You know what? I was going to save the questions for last. There's a few questions that we have here, so I wanted to get them all addressed at once, if you don't mind.
Absolutely.
Okay.
Okay, so we'll just wait till the end then?
Yep.
Okay, all right. Well, I'm going to turn it over to Ryan. Ryan is going to talk to you about where you can find some of these solutions, some of the resources that we have, and some of the changes that we have made to Mutual Trust during COVID, and kind of necessitated us to modernize a little bit more. There we go. You should see Ryan's screen now. And Ryan, I'm going to kick it over to you.
Awesome. Thank Kip. Thanks, guys, for joining us. I wanted to first and foremost run through our Agent Resource Center on our agent website. It can be found under this blue banner right here. If we just click Agent Resource, it's going to bring us to the page I've already got pulled up. But this is going to be a great resource center for you guys. It's got a ton of helpful info across the board, really, on our portfolio, concepts, we're selling concepts, sales solutions, lots of great info here. And one thing I wanted to specifically touch on is the selling system section here. IBC is one of our supported selling systems, and we've got some real good info here. If we hit that selling system section, down here at the bottom, there's a list of all our supported selling systems, and obviously Infinite Banking is going to be one of them. And if we go over to this Infinite Banking concept page, we've got some additional flyers on the IBC, as well as an overall flyer on selling systems we support. Like Kip mentioned, all our selling systems do have designated coordinators as well. So Richard's information is here in case you're working on any cases, you have some questions. Another just great resource for you to have at your beck and call. So wanted to run through that with you. Real great resource. I believe in the beginning of the call, we were also touching on e-apps. And although we don't have one currently available, it is actually actively being developed and should be released here in the very near future. So hold tight for that. That is some exciting news. But in the meantime, we do have options to take these applications remotely. So I'll just walk through that as well with you guys real quick. First, let me show you where the applications can be downloaded. Under Forms and Apps, you come over to Download State Forms and Apps. All of our applications are going to be listed within this section. They are state specific oftentimes, so just make sure to grab that proper state we're going to be signing it in. And then if we come over to the applications category, it'll pull up all those apps. And the apps are fillable PDFs. So if we click that, it'll open it up. And we'll see that that PDF is fillable. We could type within the PDF here. Just type in a date. And you guys get the point. But if ultimately we're looking to go via that remote virtual process, you'd fill out this entire app, whether it's handwritten or whether you're typing it up on the computer like I just did, minus the dates and signatures. So anytime you come here and there's signatures, there's dates, we're going to leave those blank. You're just going to be filling out the rest of the application, filling out medical questions, client info, all that, minus the dates and signatures. Because then we're going to be utilizing the remote signature process. And the way that looks like is we fill out that completed app minus the dates and signatures, and then we come over to the website and we have a new remote signature process, new remote signature portal where you can upload that completed app minus the dates and signatures. Once you shoot this over to us via this portal, that's going to get it over to our new business team, who within 24 hours of you uploading that app, they're going to send out the writing agent on that case an email to go ahead and remote sign that app. As soon as that agent opens up that email, remote signs it, an email is automatically going to be prompted out to all policy holders, insureds, anybody who needs to sign that app to also do so. Once we get that completed app, all parties are going to receive another email with a completed copy of that application. That's going to be the agent's indicator that, hey, we do have a full signed app in-house now, and our underwriting team's going to get going on that. Just another really great tool for you guys to use in the meantime until we do get you a true e-app. So just wanted to touch base, run through that. And then in addition to that, we also have, and I believe Kip mentioned a little bit, but a telemed underwriting process. And this is really exciting. The underwriting risk amount was recently bumped up to $1 million, which should mean that a decent portion of these IBC cases that we're talking about now would fall within this criteria. And if it does, if we meet the guidelines of 18 through 50, risk class of standard or better, and that underwriting risk amount under $1 million, there's a really good likelihood that we're going to be able to get this app in and approved without having traditional labs taken, which is, again, just another really big benefit, especially in today's day and age where it's hard to get people to invite strangers into their house and get face-to-face with people. Just another really good option for you guys, and hope that you take advantage of it, because we're hearing some really great things. There's a lot of agents who are impressed with the turnaround time for these cases when they qualify for telemed. So I wanted to bring that up to you guys. Certainly, if you have any other questions about that process or how we can go about that, myself and my team would be happy to walk you through that a little bit more in depth. And I'll go ahead and turn it back on over to Kip. I appreciate you joining us and let me chat with you guys for a little bit.
All right, thanks, Ryan. Appreciate all that. And Tony, we're ready to take any questions that anyone has.
Okay, give me just a second, and I will get that taken care of here. I'm going to switch it back.
We can't answer the meaning of life or anything like that, I guess.
Yeah, I was hoping that you would be able to do that, but okay. All right. So give me just a second to switch this back over to me. Okay, can you see my screen?
Yes, sir.
All right. Okay, so I've got quite a few questions here, so I wanted to get to here. Give me just a second. All right, first one is, can we get a copy of this webinar? I know that we're recording it on our end, so I'm able to provide that to the clients, but do you guys have, or agents I should say, do you guys have any printed information that could be sent out as a follow-up as well?
I can send out a PDF of the presentation.
Okay, if you want to forward that to me, I'll make sure to get that out to those that were interested in getting that.
Absolutely, happy to do it.
All right, that was an easy one for you. Okay. Here's another one. Okay, what do you say when a person says that whole life is I'm not sure what this word is. I guess they're asking the difference between, or someone that's saying that IUL is better than whole life. So what would you say to that? Because I do
Uh,
get questions on that a lot.
Sure. IUL is a great solution for many clients. There's nothing wrong with IUL. There are just trade-offs, and
Hmm.
you have to consider what the strategy is. And when you look at that, in a lot of cases, IUL isn't the best solution for the infinite banking concept because you have a trade-off of flexibility in the premium, a little more flexibility in the premium. We have the paid up additions rider, which provides flexibility, but we've married it to the guarantees and the cash value, so there's a direct relationship. But that's about 60% of the premium that's flexible versus the other 40% that will not be flexible. With an IUL, you have more flexibility than that. So the trade-off with that is they cannot provide the guarantees that whole life provides. It just can't be done. You also have the fact that IULs tend to have zero cash value in the early years. So with whole life, you have stronger early cash value growth. With the IUL, you have stronger long-term cash value growth. So that's just a couple of examples of why whole life tends to be a better solution for this concept.
Okay. All right. Next question. If I take out a loan, I am paying the interest back to the insurance company or into my policy.
When you take out a loan, you are paying back the insurance company. You are paying interest to the insurance company. It's just, we're not going to lend money out for free, just like nobody else would. No other financial institution is going to make money that way. So when you pay back a policy loan, it is taken out of, as I mentioned before, out of the carrier's general funds and paid back to the carrier's general funds. We're just recording a lien against your policy, cash value. Okay.
All right. Which segues into the next question. Why would I take a withdrawal? Why wouldn't I take a withdrawal versus a loan? And if I take a withdrawal, can I add the deposits into the future?
So the issue with that is you're just, again, spinning your wheels. So it's draining the account. Like I said before, you build up the money and then you drain the account and then you try to put the money back in. It's just not the most efficient way to do it. And if you try to design a policy to do something like that, you're taking away from the efficiency of the policy. So it's just not the most efficient strategy.
Okay. I think we just have a couple more here. Okay. I think this question is kind of broken up into two parts, and I'm trying to find the first part. So give me just a second here. Okay, here's one. Are you a direct recognition company or a non-direct recognition?
We're direct recognition, but it really doesn't impact this concept because it's such a low recognition factor, and our interest rates are so low. So if you take out a loan, it's 4.76% if you pay it back within the first year. If you take longer than a year to pay it back, it's 5%, and that's including the recognition factor. It might be 5.1, but we're still extremely competitive. We have among the lowest interest rates of any carrier.
Okay, I found the first part of the question here. Okay, so they're asking, can I write this on minors, age 0 on, and then, or age 18, and how would it work with the 10,000 single premium to access in about 5 to 7 years for college funding? So I guess what they're looking at is looking to put in money for a limited period. Let's say if someone's 18, they're putting it in for college and be able to borrow against it, is how I'm reading it. And if you were to do a lump sum dump in?
Yeah, so you have to look at some other factors with cases like that. We call that late stage college planning, and it's some of our top producers do this. And so you have to look at the benefit of moving the money the impact on the FAFSA, and also the impact of it being a modified endowment contract, because there's really no way to get one single premium into a policy without it being a modified endowment contract, unless it is being transferred over from a non-modified endowment contract. Then you can do it, and it's a lot of fun. But if you're trying to do that late stage college planning, we have a lot of clients who need to move assets quickly. They move them into a MEC, and it still, in most cases, works out to the benefit of the client.
Then I have one. Is there actually an example that shows how infinite banking concept works with real numbers?
We can run illustrations, sample illustrations for you that would, kind of help to show the, loans being taken out and repaid back. But we would tend to lean on some of our selling systems that really have, and many of them, I think half or more of our selling systems have infinite banking as a foundation of their overall system. So, we would tend to steer towards that. And by the way, if I could just mention real quick, I mentioned earlier about doubling up on the awards that IAMS provides. We will reimburse you, the advisor, if they purchase one of the selling systems. We'll reimburse you a certain amount of cost on that selling system based on writing just 3 cases and a certain amount of premium, and you can earn a significant amount of that selling system costs back. On top of that, you're triple dipping now, because what we also do is we provide education reimbursement based on production. Those same production dollars can earn you up to $1,500 in education reimbursement. So there's a lot to be gained by joining Mutual Trust through IAMS and adopting maybe one of these systems, or at the very least exploring our infinite banking material, which will help you see some of the concept details and how it works.
Okay. And I think we got one more here. Is there a frequency limit on loans or repayments? They're saying they have a couple of clients that use PLOC, much like a policy loan.
PLOC, I'm not familiar with that.
I'm not either. I thought you would be.
No, I'm not. But in any event, no, there are no limits on policy loans. I mean, I guess if you had somebody who was taking a loan out and paying it back every week, we might start to raise our eyebrows. But no, I mean, I've never heard of any issues with anybody trying to get loans and they couldn't do it. We just don't have any of those limits. And that's, again, it's an important part of this concept, is access to those funds when they're needed, and as often as they're needed.
Okay. All right, well, that looks like that was it as far as the questions are concerned. Now, I know that there was a couple of questions in regards to this next polling question, but I want to make sure that I present this to everybody. So if you'd like more information on the topic that we discussed today, I do have a polling question that if you could please respond, I'll make sure to get that information out to you today. And while people are responding to this, as you see here, if you have any additional questions after the webinar, you can reach out to myself. As you see here, my email address is tony@iamsinc.com. We also have 2 additional life sales directors. One is Justin Ford. He's in our Topeka office, and his email address is justin@iamsinc.com. And Jess Riley, who's also in the Topeka office. I know it looks like it's Jesse, but it's not. It's Jess. And his email address is Jess with an E @iamsinc.com. Or you can give us a call at the 800 number, 800-255-5055. We'd be more than happy to answer any questions that you have. So I'm going to close that polling question out. And then I have one final. If you think that the well, actually I got a couple more. If you think that the infinite banking concept is something that would fit one of your clients, you have a client that kind of popped into your head when we went over the content here, please go ahead and respond here. Make sure to reach out to you as soon as possible, get that information from you, and see if we can get an illustration out to you in a timely fashion. So I'll leave that up here for just a little bit longer. All right. And last one, if you're not appointed with Mutual Trust Life, and like I mentioned early in the call, if you were a Ohio National agent, now that they're no longer going to be a mutual company and you're looking for another mutual company, I highly recommend that you do get appointed with Mutual Trust Life. I've got a polling question here. If you can respond to that, we'll definitely get the appointment paperwork out to you so we can get you appointed. And Kip and Ryan, you'll be happy to hear I've got a lot of people looking to get appointed.
That's awesome.
So first step is to get you appointed. Second step is to get you right in business. So be more than happy to run any proposals that you need to help you with that. All right. So with that, Kip, Ryan, any closing comments?
Yeah, I want to emphasize what a powerful concept this is, and there is really no one else in the industry that does, when you factor in all that we do, nobody does better than Mutual Trust. And so, of course, I'm going to say that, but it happens to be true. And it is a way to help a lot of people get out of debt and grow their wealth generationally. So I hope to be working with some or all of you in the future, and I thank you again, Tony, for having Mutual Trust on, and look forward to the next time.
All right. Well, Kip and Ryan, I want to thank you guys for taking the time out today to do this webinar with me. You guys have been great, and Mutual Trust has been a great partner to IAMS. So would love to continue that relationship, build a business for our advisors. Lastly, I will point out for this content and other content, you can like us or follow us on Facebook or LinkedIn. Here's the information on those pages. And with that, I want to thank you guys for your time. I want to thank all the advisors for attending today's webinar. I hope you guys have a great week, and we'll talk to you soon. Thank you.
Thanks, everybody. Happy selling.
Thanks, guys.